Okay, hi there, guys. G'day, Peter. Yeah, we always get the Adelaide weather, don't we? Cruising across there. If you're copping it, we're probably going to cup it. Well, we are. So yeah, it's raining quite a bit over here. Apparently, it's meant to be. I don't know. We're getting some storms through. So started, I think, last night, early hours of the morning, and it hasn't really let up. It's not thundering down, but yeah, it's a bit wet out there, which is good for my plants. So I'm happy with that. Okay, just wait for a few more to get in. So let me know if you can hear me. Also, always need to confirm that. I know the system's up and running or playing up a little. Um, What else we got today? Usual gang in. Yeah, all clear, fantastic. All right, guys. Like I said, there's usually a bit of a lag in the YouTube stream, but we'll keep at it. Now, just remember, if you're getting on the actual screen, if you're having a few issues and it's a bit blurry, just go to the bottom right-hand corner of the YouTube channel. You'll see settings, a little wheel. Click on that. Go to quality and click it up to was it 720, and that should make sure it's clear coming through anyway. Um, We've got the internet's hanging in there, even with all the rain. Funny enough, for anyone that's been following me for a while knows I've had a few little internet issues. Looks like they're digging up the road to put in NBN, which is nice because street parallel to us, both of them, either side have actually got it. So we seem to be the one that doesn't. We're finally, I think it's getting our area, a lot of our area had it for a long time. We've been here just over a year, and it's been through this area for quite a while now, except for our street for some reason. So yeah, it's coming in. It could lift, be a lot better and make the stream a lot quicker, a lot easier. Anyway, what I want to do today, well, for starters, welcome to TradeSetup live stream. What have we got there? The 13th of December. A couple of steps closer to Chrissy. Market's not quietening down either. It's not a Christmas rally either. So I think the Christmas rally's out the door. We might get a little spike up into Chrissy or through Christmas. Who knows? But the way the markets are at the moment, I still think any sort of issues are going to take a while to play out, between China, especially between China and the US, which is, I think, going to be the main focus for markets going forward. We know what's happening with interest rates in the US. Interest rates are going to one more interest rate rise, I think, this year, and then potentially next year's are still up in the air. Gone from four to potentially two for the year. Two more rate rises probably earlier on, and they might hold off on one, do another one. Numbers, we've got CPI come out in the US, which is not too crash hot, which is probably what they're expecting. So that's not really the unknown. I think there was a good news out overnight. Well, two things. You got Brexit. There was a vote of incompetence in May, and she got through okay, which means that in the dying stages of coming to a deal, coming to an agreement, she might get her Brexit deal through. But yet, I mean, that was one big step for her, the vote of unconfidence. Um, to get past that. So hopefully, that could be a good boy for Europe, especially the UK. Um, but we'll see how that plays out. And then you've got what is it, Italian problems with the EU. I think they submitted a new budget with less debt on it. So that was a good step forward for potentially emerging markets over there. So maybe the heat's off for a while, but we'll see. I guess everyone was always focused on the US, obviously what Europe's doing, but focused on the US, and they seem to be focused just on the trade tariffs and deals at the moment. So we'll see how that plays out the next few weeks anyway. So if they can get something sorted out before Chrissy or over Christmas. I've still got 90 days, well, less than that now, probably 80 something. But that was the deadline, so they're not. Trump was, I mean, he goes back and forth. One night he's saying one thing, the other night, next night he's saying something else. But last night they were saying that no more tariffs within the 90 days because China's coming to the table. They're going through negotiations. They're doing taking some steps forward. So we'll just have to wait and see how it all plays out. Today, I'll get rid of this. Today, let me just transition. There we go. Today, I thought we'll just have a quick chat, obviously about the markets. Probably don't need to talk too much. We'll just go over the charts again quickly, especially in the Dow and the S&P. Maybe have a look at the FTSE because that could be of interest to a few in the DAX. But we'll probably open it up a bit today. I know we were talking in the forum recently. A lot of people don't have positions. There are some that are still jumping in, which I can understand both sides because the market is completely and I was even just flicking through some charts before, trying to flick through different sectors, what's happening, and there's really not a hell of a lot for what I like to see anyway, that I'm confident to chuck some money in at the moment, especially with the way the markets are. I mean, things could turn on a dime so quickly, and Trump's always on the horn talking either up or down, so you never quite know what he's going to do, and you can see when you look at the Dow charts, it seems to be stuck quite Lauren, how are you, mate? Stuck in a bit of a range, but it is quite a broad range, which is just still a volatile range, and we'll see that between chopping up between support and resistance. But the more you can see, if the sellers start to come in a bit earlier, it's going to put the pressure on. Doesn't mean too much if you get buyers starting to come to that point of agreement. Buyers are lifting at higher levels, sellers are dropping to lower levels to get out. It's still, we just want that volatility to come out of the market, and then really we'll have to see what happens from there. But yeah, with regards to positions, I mean, nothing wrong with being in cash at the moment, because if it's not set up, you shouldn't trade it. And if it does set up, if something is setting up, you really do, in conditions like this, have to take into account what's happening in the overall market. It's pointless to jump into something if the overall market's in a clear downtrend, because I mean, there's going to be times when it can get you in and flip you straight out again. It's not going to be your typical bullish moves. And don't forget, fear is different. A drop in the market because of fear is a lot different to just a pullback, an orderly, content pullback. Pullbacks are different. They can be orderly, they can be, lower lows, lower highs, a bit more controlled. So you can get into a stock which could hold up quite well, even rally in markets like that. But when fear grips, which we don't know if we're out of the woods just yet, if fear grips, people just chuck it out the door. And don't forget. So remember the GFC, when things started tipping over, it just became a free for all. And knowing who cares, when you think it's just going to crash and the market's crashing around you, you don't care about your technical setups or your fundamentals. You just bail. You'd rather be on the sidelines. For people that didn't, I personally know a few people that didn't. I don't know if they're out now, but that didn't and took that heat. And I mean, if they were still holding positions now, they may still be underwater from the GFC. So you got to remember that a fear driving the market lower is a bit different to, an orderly correction. And I think we'll just have to wait and see what plays out. I don't like picking direction either way, because you get held to it too much. I like just waiting and seeing what's happening, trade from what you see. We did add a position triggered this morning. I won't say what it is because it's still around the area. So anyone that's paid subscription, will know. But yeah, it looks good. I still think there's some good upside. It's been trending high for a while, starting to hold higher lows, higher levels, which is always a good sign. And when the market's been under the pump a bit, it's been holding up well. And the market starts to lift, it's starting to lift as well. So it's a good sign. So I'm always looking at, for instance, got my eye on this XJO. You can see this rejection, the tails, the wicks that are coming in. It is squeezing through that level at 56, 50. I was hoping to hold up around 56, 50, 57. On the weekly, yet it is still holding up just at the moment by the skin of its teeth. We're up 13 today. We don't know if nothing's confirmed just yet. We've still got the pressure is well and truly down, but you've got to take into account how stretched it is into that level. So if you were going to sell it, you probably have either done it or you're holding on. So for me, I'm looking for a potential pop, and if we can get a bit of a pop, I think it's going to drive a couple of stocks higher. But again, at the same token, just because it's a pop doesn't mean we're out of the woods either. It's okay to have a couple of good, solid shares, but I wouldn't be loading the boat either until we get, you really need this market to pop, pull back, and build a major higher low, especially on the weekly. If we can get that higher low, I think that's going to drive us back up to higher prices. We have to take it as we go, just assess as we go. But yeah, that's what I'd rather be adding more risk into the market, but only, again, it's only when they're set up. Like I was saying, there's not too much setup. I think gold had a good day the other day when gold rallied overnight and Aussie gold rallied overnight, but then they turn around and are straight back down the next day. So even gold stocks are struggling slightly. We'll have a look at, actually, where is it? Look at that now. XGD, you can see, go back to the daily, big pop up here, straight back down again. So that sector, even though this looks okay on the daily charts, actually you can see this. Actually, no, we'll just continue on. When it was last time it was overbought, was way back here, and that was in July when it pressed up, had a big sell-off. The sector we're talking about, XGD, the sector, went back down oversold, pressed up again. It got to overbought again. You can see the stochastics run out of steam up there, but at lower levels. So that's never a good sign. Then we had this bit of a pullback. That's a good sign that we're starting to hold this higher level at 49. So from here, I would really like to see it hold above 5,000 on XGD for potentially a bit of a run on gold. But again, that's all going to be to do with the US dollar. Gold's not moving really because of a safe haven. If the proverbial hits the fan and the markets fall over, they're not jumping into gold, they're jumping into US dollar, which a lot of the times recently has pressed gold down. So if US dollar rallies, especially on the back of fear-driven rally, they're going to be repatriating back to US dollars. They're not going to be jumping into gold for a safe haven. I don't think. I haven't seen it that way either. Anyway, it's more got to do with the gold movement. It's more to do with the US dollar movement. So if we look at it that way, look at what's going to happen on the US dollar going forward. So no more rate rises. You'll probably find that the US dollar could be stuck in a range. If it does head south, then we might get a lift in gold, but I don't think that's going to be any, it's not going to be a typical safe haven buying on the market. I mean, on a bit of a pullback. Look, it could be because you do get that type of reaction, and it's got to be, I think, some a serious pullback into equities for a bit of a safe haven buying into gold, and then you've got to look at it from, if that's a fear perspective, then I wouldn't be inclined to be jumping into gold stocks anyway. I'd be happy, I'd be happier on the sidelines and just potentially looking for some shorts or, trading indices or trading something that you can have a bit of a nibble at. But again, when fear drives the market lower, it's a bit different to, like I said, an orderly correction. This potentially, I'll just try to find something we're talking about. Let's have a look at, let's just get up the Dow now. Might as well get into the Dow. Up down 11. So we're just backing off on the ASX at the moment, a little. So this is the Dow on the weekly. But this is the physical index. It's not the futures. So you can see I've got a couple of support lines here. I think if we do, this is longer term. Okay, so you can see, maybe you can see. Let me just make sure you can. Yep. So you should be able to see the support zone around here, around 6,500, and that was back in 09. March 09, sort of after the GFC, we capitulated through end of 2007, 2008, started 2009. About March is when it started lifting. So that was a really good time for us, to be honest. We started buying. I don't know if anyone knows the ETF. If you're looking at ETFs at that stage, the XLF, which is the financial sector in the US, that got absolutely poleaxed. And if you look at the ETF, there's no chance in hell that was going to zero because it's a whole of the financial sector in the US. So we just started buying into that and selling calls. And we sold enough calls to make pretty much bring our break even to just above zero, which is a cracker. And then it just left it through a rally. And when it started rallying, so pretty happy with that little trade. Don't know where we took it off, to be honest. Didn't get all of it, but yeah, that did well for us at that stage. So this is the S&P. So this is the Dow. You can see the Dow's lifted, and we've got a support zone here. It's found some support. Every time it spiked, it got bought up, spiked, got bought up. Big trend up here. Washed out. You got this pullback in here off a lower high. That was a deep correction. I can't remember when that was due. That was in 2015. Don't know exactly what that's due to. If anyone does, just whack it in the chat. Big correction there. That, lower high, but then pretty much found support on the lows again and started to lift, cleared out those highs with this little pop up, little grind lower, then started building a new trend up and trended all the way up to where we got to around, was it 26,575, to the all-time highs of where we just got to recently. So the market, I'm finding is a support zone. You know, if you take it across the lows, these recent lows, that's our first level. Now, this one's the one that's going to come under fire. I think the longer term trend, if it does, you know, if this doesn't hold up, we've got some serious selling probably to come, and we might get a bit of fear-driven selling. Just drive it lower and then start to build that higher low and let the support zone catch up. Again, that's going to take a long time. I'd say if that was going to play out, um, I'm not inclined to think we're going to get smashed and just head straight back down. This was the GFC when we did get smacked down then off some lower highs. This price action recently is more choppy. Whereas if you can, actually, if we can just drill in to the GFC, see the price action there? Price action, it was more, okay, it started rolling over, popped up. It wasn't really bang, 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 bang like we're seeing now. What we're seeing at the moment is more hard sell off, hard rebound, hard sell off, hard rebound. Whereas this was a sell off, pop back up, lower high, bigger sell off, come all the way back up again. And this is when your MA started to cross. So this was the time when if you weren't out, you just want to bail then. And especially, you know, at this stage back in, was it May 2008? So you had quite a few heads up. And this is probably another point. You've got, this is why you have to take note of what's happening in the overall market. You really, in my opinion, you really have to, because this is going to keep you out of trouble. And if you don't run stops on your own positions, on individual stock positions, that's fine. That's great because there's going to be times when the market can sell off, it doesn't really come under pressure, or you might just get chipped out and it takes off again. But the one thing I'm always concerned about is a major fear-driven sell-off. And fear-driven sell-offs, like I said, I really don't think there's any protection for any stock. They get hammered pretty much across the board. You'd be very rarely that you can find something that people are happy to buy when the market's getting, you know, hammered like we were in the GFC, and completely the unknown. Because you got things like margin calls, everyone's getting called on margin. You got ETFs getting hammered; they have to readjust, keep selling their positions, so keep selling into the market. So you've got quite a few things that can just trigger sell-off. So with a fear-driven sell-off, I think you just want to be prepared if that's going to play out. Not saying it is at the moment, but that's why you have to keep a close eye on the overall market and what's happening. And like we saw here, if we can draw this up, we saw, you know, back in '07, this punch up through the highs, it didn't sustain that. And then this is your first anchor on this trend. It was quite contained. There was, you know, lower volatility in that move up. It punched through the highs and then pretty much rejected. The rest of the markets, I think you're looking at the euro, the DAX, sorry, not the euro, the DAX, the FTSE, our market. It didn't do the same thing. So the US just washed out the highs, dragged in a few buys, and then turned around and squeezed them back out. Then you've got this lower high, pressed down through the anchor. So that was your first heads up. Okay, then you've got, you can find your support zone through here. The market starts to squeeze up and then starts to fail again. And that's when your MAs are crossed through at just that high in there. So that was your, you know, a big heads up after you've broken the anchor. The uptrend is broken. That's a major bull run. We could be in for something here. Who knows what's actually going to happen? What's going to play out? You don't know that it was going to get this play out all the way back down to 6,500, say, from what's that, 13,000. So pretty much the index halving from there. You never know that's going to happen. But what you have to be is on guard. Okay, you have to have a plan. If this just starts to fail, you know, if you're looking at it here and you're going, look, I've got some positions, whether it's in the US or on our market. If it's on our market, we were probably doing something similar. We'll worry about that later. But this market's starting to roll over, and then you got the bad news starting to come through. All the news is talking it up. You had big correction on the Dow. In percentage terms, this is quite big. Even that first leg was quite big. This first sort of move down, it popped up, squeezed out a few traders. So that, if it was a strong market, it was going to start to retain. Shouldn't really have started tipping over so hard. It should have been grinding lower and then start to build, and you get a race up to the highs again. But instead, you know, when I'm talking that, I'm talking the move down should have been a bit more controlled. Which, let's just get rid of that. And we've talked about this before. Everyone knows what I'm talking about, I'm guessing. Here we go. So when I talk about a more controlled move, for anyone that's new, this, you can see this move down, a big red candle, sort of an expansion candle. For lack of a better word, a pissy little green candle, another expansion. So this move down was wasn't taking much time to go from highs to lows. It really took off, whereas this move up was a lot more controlled. So that was controlled, which leads you to believe when it's a controlled sort of move up, you don't really want to see that. if you're a bull. And then when it starts to tip over with speed, yeah, you probably want to be careful that we're going to take out the lows. And of course it did. This is all hindsight. But if it started coming down in more of a controlled manner, and the angle of descent wasn't too, like this angle of descent was quite, I guess, steep. This angle of descent, if controlled, that's more of a controlled. So that's less fear in a sell-off than this type of thing. That's more fear-driven. So when it's fear-driven, and you're probably loaded up on, if you're loaded up on the ASX and you haven't bothered to get out with, with these heads up or these warning signs, then you probably want them to be on the safe side. And this is probably one of the hardest things, as most people would know. G'day, Preet. Sorry, mate. I'll get into that in a second. The hardest thing to do is cut with losses. And this is why people get caught time and time again, because they just don't want to cut a loss. I mean, I kick myself. I've got hard stops in there most of the time when I trade, because I know I can be an idiot. I know I don't want to pull the trigger. And you never like pulling the trigger on a loss, but it's just one of those things. If you don't run stops, you have to be prepared to do that. And you have to take into account what the overall market's doing, what the full market's doing. Otherwise, you can get caught out by just not accepting that you're wrong and not knowing what this market's, what the Dow's doing. The Dow's starting to capitulate. We were starting to follow it. Then you got this little, again, a little retracement, probably 1/3 retracement of this move down, and then it started really getting hammered. And really, that's when you did not want to be out of the market. You had more than enough opportunity to get out, more than enough heads up that something's going on that you don't know. And if you don't know, get out. It's always better to be wrong and on the sidelines than wrong and in the market. If you're wrong and it does pop up, you can always get back in. You haven't taken too much heat. But if you're right and you're still in the market, you can, not if you're right, but if you're wrong about which way the market's going and you're stuck in it, times like that, when it gets hammered, it's going to be hard to exit as well. And you're going to be sitting on these losses. You either have to book them here or just hold on for dear life, just close the book for the next year or two and just watch the market. But yeah, if we go back to, I'll just sort of go over that just because I always find that market interesting. Whereas this is still on the weekly. You can see this action is a bit choppy and it hasn't broken, for me, the clear anchors at 33.70. It hasn't broken that clear anchor just yet. And everyone's talking doom and gloom. We're talking a bear market. We're talking this, we're talking that. But technically, it hasn't broken anything just yet. And it did, last probably a few days, it's reacted off that. This is the Dow. Yep. It's reacted off that 24,175, or say 24,000 mark. It's reacted off there. But you can see the actual, forget it's the daily. It's the, so yeah, it's very whippy. So that's, okay, that's a good sign of selling, but just the buyers, there's still buyers hanging around willing to buy it up. Okay, the sellers have smacked it back down again. So there's sellers are, still quite strong. Buying, got that buying pressure still. The thing is, we just got a lower high, and the lower high is pressed down with the next bout of selling. It's taken us down through that support zone around 24,000. It has rejected a couple of days ago. And we're sort of in the midst at the moment of rejecting that level, but that trend down since October, mid-October, start of October, is still in play. But it's just whether or not there's enough buying pressure at these support zones to start to lift it. And we want to see that off a higher low. If that can play out like the market press down, we want to see a good press up. So we want to see another deep. The last thing you want to see is a shallow retracement of that move down. By shallow retracement, what I mean is, if we get this type of thing and then we start getting, a lower high coming into play, that for me is a bit of, I'd be a bit concerned that we don't break through. You got a major lower high with respect to these lower highs, major lower high here. That was the best the buyers can do at that stage. You can only move it back up to the MAs. And if we start holding the MAs rather than pushing through it again, it's just showing that the buyers are starting to wane. The buying pressure is starting to wane. It's run out of steam. The sellers are still in force, and that's what could lead us to that press through that 24,000, even down to 23, down to where basically that anchor is. What's that? 23,370, say, give or take a few points there. Where do we get 370 from? I'll have to readjust that. Does that make sense, guys? Just what we're looking at. So I wouldn't be all doom and gloom just yet. I still got my eye on this market. I don't mind the fact that it's choppy here. That was a fair bit different to a move down, broke the anchors, what we just looked at through the GFC, a bounce back up, build a major lower high, and then the pressure coming in. That was all over a longer term period. So if this weekly still chops around, up here. It can chop around. This could go sideways. I mean, it could go sideways for 6 months to a year. Who knows? But there's not too much reason to be concerned. Well, it's concerning, of course, but you can see the market's also stretched from overbought to oversold, and we're hovering around that 24,000 mark, potentially going to hold up above the anchor at 23 without breaking this downtrend. Even if we do, breaking this uptrend, even if we do break it, it doesn't mean we're going to capitulate straight down to here. It could mean we just bang around, okay, and just clean out a few traders. There's always going to be some buyers trying to pick out a bargain. They get squeezed back out of the market, but there's still enough buyers around to hold it up a bit. I hope that makes sense there, guys. So um, what we'll do now, we've got Preach just putting something. I'm just could you cover BBS, BUS, and Bear on those along with the VIX. Actually, what's the VIX doing? I don't know if I've got the VIX here. Surely I've got the VIX. Oh, there we go. Yeah, the VIX is. Oh, it's really hard to chart. It's just down on its low when it spikes, and you're not going to be able to chart that. Okay, it looks like it's coming in. Boom, you get a spike. You just got to be careful because this, when it's on its lows, on the VIX, for instance, down on serious lows, which it has been. What happened through the GFC? This was the GFC. Look at the VIX just absolutely rally, but then come straight back out. Or the volatility comes straight back out of the market. So when obviously you don't want to get caught with those volatility spikes. If there's a volatility spike, you're probably not going to see it coming. So it's a very hard one in my book to keep an eye on. It is, you can see it is at sort of it's off the lows anyway, and that's probably goes into, like we just mentioned on the, where is it, on the Dow, because we're getting these big swings on all markets. We're getting a fair few swings. So yeah, that volatility. I mean, if it backs off, then people's maybe becoming complacent. You might see, and then you just have to, when we get this market or the VIX comes back down again to the low, say 11 or so, or 12 or 13, you have to take that in the context of what's happening in the overall market. Are we starting to come to a point of agreement? What would I want to see if I want to be a buyer? What would I want to see if I don't want to be a buyer and maybe be a seller? So you have to put all that in the context. But I think, yeah, at the moment, I'm not too concerned with that, with the VIX, because if it cracks down, we know the VIX is going to spike. It's pretty, pretty straightforward. What was the other one? Let me just get that up again. Okay, we're going to bears. Put some stocks in there too, guys, if you want. If there's anything, actually, we might have to take this opportunity. If there's anything you want to talk about that doesn't make sense to you and you've been, sort of mulling over for a while, it's just a question on how I look at things or what I'm looking at or anything at all. Just chuck it into chat. Otherwise, just put some stock codes in there. So what am I looking for now? You got there, bear. Yeah, I'm guessing you're looking at this. Holding through here, looking to spike. Triangle coming in, finding support, off she goes. Laurent. There you go, mate. Just throw them in there. Bear heading south, is it? What are they? So I'm guessing it's an ETF. Is it a reverse ETF or just a bear market ETF? What? I don't even need to look at the. All right. Doesn't know what to talk about this one. If it's a October. Is this one that on bear, if it heads south, if the market heads south, you make money, or does this correlate directly to the index? They've got all sorts of things on all sorts of ETS, double short. So if the market craps itself, the price actually goes up. If the price on the ETS going down, it's probably a bullish move on the index. It's all these sorts of things. So I get myself confused in what I'm looking at. Long-term holdings. We'll touch on that in a second because I think we'll look at the ASX. Just a sec there, Lauren. All right, bear. Let's get over to what was the other one? BBUS. TMF units, so it looks a bit the same. All right, let's just get onto the stocks. Throw me some serious questions there, Preet. You bully. All right, let's get over to BHP. Let's go here. Was that the one? So I'll just put up BHP. All right. Yeah, it's better off to. I'm more concerned with the weeklies just at the moment on a lot of these big ones because I think a lot of it sort of hangs on what's happening with the US and China. I don't know if anyone saw the. I thought I'd look at copper yesterday. Um, Found a couple of interesting articles on copper in relation to what's happening with China and the US. I think supplies over in Shanghai Index and COMEX are low. Our physical supplies are quite low. Production's still ticking along okay, but I think the demand is still high and the support is low, but the price is not actually moving. That's got a lot to do with what's happening, with commodities and over in China. So I've just got my eye on that because actual technically, you're holding some higher lows on copper, but it just keeps headbutting up against some resistance zones. So it's one just to keep in mind because if it gets more positivity in what's going on with US and China, and then tariffs get lifted and all these sorts of things, they work out their issues, their love issues, then you might find that copper starts to run because the fundamentals of low supply should always, low physical supply should be bullish on price longer term anyway, which could be bullish on a lot of the shares, but we'll have to obviously check those out as they play out. Now BHP, let's draw this up. I don't really follow BHP. I mean, it's up near a clear sort of resistance through 36, and that's really, you can see, move down, corrective price action, another move down. The good thing is we've come all the way back up, and when you come all the way back up into an anchor level, especially for a downtrend, longer term, it's not a bad sign. It doesn't mean we're going to go through it. It doesn't mean anything. It just means that that's more bullish than this type of move where it retraces, say, 50% of that down move and then starts proceeding with lower highs, proceeding to move down again. Whereas this, potentially around this market should have held a lower high, this sort of action, held lower highs and then headed south again. But instead, it continued to rally. So that's your first sort of thing to take note. We're still holding the weekly support zone. So we're pretty much bang on one right now. And you can see that this little move down here and coincides with some fairly heavy selling, but it's getting soaked up. So going from overbought to oversold, it's getting soaked up quite well, and that everything sort of coincides with this support zone in here. It doesn't mean that we can't, potentially we would pop up to 34, build a lower high, pop up and then start to find some selling pressure and just cave in from there. But it's definitely a zone potentially to start having your eye on, especially if, like I said, China and US work their issues out. This could be fairly positive for BHP. I don't know how they stand with all these issues, but commodity prices, that could give it a bit of a boost, which could lift it straight up and through 36. All right. So that's the weekly. The daily, let's go back to the monthly. Not much to look at the monthly anyway. So it could just continue on in. And if you're looking at this one, I'd always be wanting to work off a higher low. So we get, say market holds up around that $30.50 zone. You got minor support through here. It's working in well with that weekly rising support as well, across the lows. Price page, yeah. So if that support holds, I want to be proven that with a high low. However it plays out, I wouldn't be just jumping in off support, because jumping off support, lower highs, because there's still, actually, let's just make that a bit thicker. There's still lower highs in force just here. You got the high up towards 36, up towards a major resistance zone. The market pulls back, has another go at it, still holds that support zone. So a lower high in play at 34, pulls back. This could be a new lower high at 33. So that's why I'm always looking for confirmation. And by confirmation, I mean, we just draw this up so the market's press down. This is your lower high. Press back down again. We're up about here on BHP. If we do start to press down but then hold higher levels, I'll be more inclined to be bullish. And this is my higher low, my break, and then you're probably going to get some buyers dragged into the market, and then potentially heading back up to 35. But again, I think it's got a lot of work to do to get through it. 34, then look too short. Yeah, I mean, this could easily. There's going to be a fair few buyers. Don't forget we had that longer term trend up. A fair few buyers are probably going to have anyone that's been following up. Don't forget, and this is what we always talk about: fuel for a move, fuel to trigger a move down or up. You've got these buyers that lucky enough to buy it off the lows. Okay, bit of a pullback. They started buying in here. You've got all sorts of buyers along the way, last few years, buying it right up here. We come right up into a resistance zone. So if we do break down through that support, there's a good chance there's a lot of stops under there. There's a lot of stops under there. Sorry, just looking at your comments there, Lauren. There's probably going to be a bit of fuel. So that fuel could be quite significant because it's had quite a long-term rally. And that fuel could really drive that market lower. But again, we just have to wait and see what plays out and wait to see if it does play out. If it does pop up to 34, holds a lower high, then just looking at the reverse of what we're saying here, rather than that, the market may pop up and then, well, just draw it here. May pop up and then start to find some resistance. You got your lower high, then it's worth a bit of a shot, especially if it comes down to 30 and it starts to punch through 30, then you know the game on. What was the next one? All right, Lawrence throwing some at me. Where are they? Long-term holdings. Let's look at. Where are they? There you go. CDA. I like this. You can see not much to talk about this. The longer-term trend's up. This is still a weekly. This is looking a lot better than it was just a couple of days ago, and clearly, just back to the weekly, you can see this trend is up. Every time it's correcting, it's getting bought up off the MAs. Now it's sitting straight on top of the MAs at the moment. So, excuse me, sellers have come in, have pressed it down to the MAs, tried to pop it back up. So they tried to give it another nudge and only got so far as about 290 on this previous low, and it started to lift again. So the last couple of weeks it started to lift. It's struggled, but the overall market struggled as well, don't forget. But you can see the stochastic going from overbought to it's heading towards oversold, yet any sort of form of selling is getting soaked up by the buyers. So if it's getting soaked up and they're giving it a good nudge, that's a sign of strength, not weakness. Okay, so it's ready potentially just to continue on the trend up through 340. Obviously, we'll just have to keep an eye on it, but this daily is starting to show some good signs as well. The problem for me is just a lack of, potentially a lack of volume on the offer. But yeah, that one's it's looking good. You can see this press down, pop up, pull back, higher low, and if it gets through maybe, what is that, high at 314, you might be able to buy it through there. Again, considering the market, maybe keep some tight risk and just keep an eye on it. But if these stochastics start to turn up, not a bad sign on the weekly. CLV, yeah, good work, mate. That, I don't know why. This one's lacking volume too. I've done 300,000, so the volume's picked up the last couple of days with this little pop. Again, longer term trend. This is the biggest problem. It's been on for me anyway. It's a bit different to this price action. Gradually grinds higher and starts to lift. This is ideally what you always want. You want it to kick on and kick on hard, and then when you get in, you never look back. The market just kicks on from there, and it just goes hard. Whereas because it's already gone hard, you have to think twice. What it has to do is a lot of this price action is to clean out the late buyers, is to clean out a lot of buyers, put them on the sidelines. Potentially there is somebody or someone, a fund or whatever, who knows, soaking it up, and they have been soaking up for a good part of 6 months now. And you can see that because every time it punches down, it gets bought up, punch down, bought up, punch down. It is lower highs, which is good. This little washout here, but it gets rejected each time it comes down to sort of that 120 to 130 mark. Someone is buying it up. So on the weekly, ideally, I think it's just starting to break up. I would always want to see that higher low. I want to see it pop up, pull back, build a lower high low. And for me, that higher low is going to drag in a lot more buyers because it's showing a lot more confidence. But from the daily, you can see that you just take it straight across the highs. It's just breaking up. Probably is just about now. So this is the one reason why it's kept me out, as I think we've discussed this one, Laura, is just pure and simply, I've always liked that contraction. I don't want to buy on the breakthrough there because this could be up, straight back down. I mean, you don't know. As it is, it's broken. This is the contraction we're looking at. That's your triangle, whatever you want to call it. Pretty little pattern. Markets pressed down, kept getting soaked up through that 130, 120 to 130 mark, 125. That support zone there. And it's the first time it's actually popped up out of contraction. So again, what we're looking for is always going from contraction to expansion, trying to buy into expansion. So we're getting on the right side of the market, not technically buying into contraction because you just never know how far it's going to go, how deep that contraction is going to be, if it's going to break, whatever. But when it starts to rise, it's a lot more clear cut, and you want to be early to that trade. So yeah, good one there. SHV, nice bugger. Again, this one got mine. I'm always steering clear in markets like this when it's overextended. I find it a bit tougher. I do like that weekly chart though. I think it's still potentially early days, and it's quite clear on the weekly chart. You've got, oh, not that. It's not what I wanted, was it? On the line. Here we go. Support through 4. You got fairly clear. It just touched on it here. Just about. I'd say that's close enough to be a retest, a double top, whatever you want to call it. Good pullback. Started getting soaking up at $5. So that's a definite high low, and we're starting to lift. Whether we just, this is our price action, up, down, starting to go up, or whether we continue to contract longer term, who knows? I'd rather see that over the longer term and get a bit of concerns out of the market, back out of the market, and then start to see it lift. Or I'm just going to miss it on the weekly anyway. But I think on the weekly, it's slightly getting ahead of itself. And if you can see, ideally what you'd want to see, let's get rid of that, go down. On the weekly is these sorts of pullback. If we can drill in on that, this sort of a pullback. This is a pop-up, the MA's crossed. This pullback is going to take a few weeks and then start to go. And I think from there, whereas at the moment we've just kicked on a bit off the weekly, we haven't had a fairly controlled pullback like here, potentially this one. These are all quite clear cut. A couple of down, couple of red candles here on the weekly, green, red, inside level, bang, clear. Inside level, bang, up she goes. Here, up she goes as well. So that is a bit more clear cut than just what we're seeing on the weekly now. And potentially it's just coming to that 625, some resistance around there. If it washes it out, we might get that pullback. You want to see a couple of red candles, and if it's on the weekly, you want to see a couple of those red candles, but not a deep correction. The longer it takes to pull back, and the higher, the shallower the pullback is always better. That is generally going to lead to another thrust higher, and you can be more confident in that kind of setup than a deep correction. Like this is a bit of a washout, clean out. If we get a bit of a pop here and we get this over a fair few days, a bit of a pullback back to the MAs and start to lift, that would be, I think, game on. SHV, what else we got out? VIX, CDM, CDM Rio. Downtrend, cadence, I'd steer clear of that. Caught too many times on ones that, my biggest issue with trading, especially stocks, and I've still got some crap on my books at the moment, is when I believe a story. If I start reading too much, the fundamentals, and I mean, anyone that knows me knows I'm probably CCA was being one, and that was just crap, to be honest. You start listening to a story, you start convincing yourself it's a good thing, and because you've got time up your sleeve, you can convince yourself over a long period of time. And then, of course, when it comes down, you don't want to believe it. If I stick to my technicals, it always works a hell of a lot better for me. I know, Helen just read that. Yeah, SHV. I'm always a bit more cautious, if you don't know, a bit more cautious in these market conditions. I like things to be perfect, or at least closer to perfect than happy to be more aggressive when the markets are bullish, but when they're bearish and there's concern out there, there's going to be times when you've got to load up a bit. And that's generally when you start to see more signs that support's holding up. But yeah, I hate seeing things go on without me. There's been a lot lately anyway. So cadence, I don't see any reason to be buying that at all. It's not even down. Next clear support zone potentially, you've got down towards 80 or 70. The previous breakout point. It's kind of pointless because that was back nearly 10 years ago, 9 years ago. So I don't find that really comes into play. The only other thing I can see is off this week was this pop down from 160 down to say 115, 20, 45 points, 45 cents from the highs around 135, taking us down to about 90. So that's a kind of a measured move down, measured move down. The problem for me is that if there's any buyers still left in the stock, they're going to get squeezed out. I think this kind of a move down is quite heavy, and I think this kind of a move down takes a long time to repair. It doesn't just go bang straight back up again. Yeah, I am, Laurent. I don't like to say it, mate, but you've got to have your bag holding stocks, don't you? If anyone wants to see this chart, yeah, that's it. And that's why you don't ever want to hold something. It was looking great up here, then boom. So I've sort of written that one off. I missed it. Yeah, nice work. Sold it recently. Ah, there we go. So anyway, they're the ones. They're the ones you sort of want to steer clear because from here, you know, to repair the psychology, to repair the people's confidence in the market, it's just going to take some time. Look at RAP. We've traded this. So when was this? Back in. That's not right. Was that it? I thought it was a lot longer than that. 2017. There you go. So 2017 when it first cracked, I had this long in here personally. Cracked down here, bought some in here, made some back, averaged down a bit, and then kept holding it because it actually didn't look too bad. And then that's one time I got the fundamentals right. It actually was doing some good things and started to lift. I eventually got out around 15 or 16. I think it was in this secondary push up here. It was around 16 cents. I got out completely. I actually made a profit overall on that, but you can still see it come back over, close the gap, bang, straight back down to about 10 cents, 11 cents now. So that, even though it's tried to repair itself, it just can't. So there's times when you'd rather be out, take the hit, and just I'm always sticking to my technicals. I don't mind the fundamental to support it, but I can trade purely on technicals. If I trade purely on fundamentals, more often than not, I'll probably get caught. Probably because I just don't understand them. That's why I stick to my technicals. What else we got? So that was getting sidetracked. Where were we? CDM. Yeah, so for CDM, I'd just be steering clear of that. Again, if you're going to buy that, if it's a good story, if the story's actually building, the price is not showing it yet. So there's not enough people that know the story just yet to warrant to buy. It could be the best story in the world, but if no one knows about it, it's pointless buying it. So yeah, just keep an eye on that if you do like it. I wouldn't short it either. On the flip side of that, because it is quite extended, and like I said, we're getting towards that 90 zone, which I sort of take as a measured move from the original high. That first leg down, that sort of consolidation sideways, and this secondary move down from 135, say, takes us to about 90. So to short it here, I don't think you can get much out of it. And to go long, it hasn't confirmed anything just yet, so just keep an eye on it for now. Is that Rio? Rio, you have to go back to the weeklies. So it's a lot like BHP. You're coming out of that resistance zone. It started to back off. We have got a reaction off that zone around 90, I think it is. See back here, around 90 bucks. We have reacted off there. We just broke through this support zone around 72, 72.50. That's the recent low. So it's actually anchored to this uptrend. You can see the markets, pull back, grind up, pull back. As soon as you take out a minor level, pull back and it starts to lift again. That's a weekly anchor. Popped up. We've taken out that weekly anchor. We didn't quite finish below it. It was rejected quite easily. We popped back up. It is still a bit choppy. So for me, I wouldn't touch this because you pop up, pull back, you've got a higher low, confirms a higher low, straight back down to take out that higher low. and to where we are at the moment. So this could easily have been a washout on the upside, and we're going to head south, or we just got this washout on the downside and we start head up. You don't know. So there's nothing for me off the weekly confirming anything to buy at the moment. And the same on the daily, I sort of wouldn't go near Rio at the moment. I think Rio, they tend to do washouts a lot. A lot of these bigger stocks, they get played a bit, chopped around a bit. So just be careful on those, I guess. What else we got? Inverse ETF, Bear, we've got that. Bear is inverse, BBS is US Bear inverse. Let's go back to Bear then. So it has popped up, the market's pressed down, but it is, okay. So potentially it's on its lows here. Starting to lift, that trend's down, so that's not actually a bad sign if you're a bull. Maybe we're getting a bit of this, we head south again, which means that the overall market's heading up. We'll wait and see. Keep us up to date on those because more than likely I'll forget. What do we believe in? Not just Australia, but Asia keeps pumping out. But again, I could change my mind within a few days. Good work, Laurent. Nothing wrong with changing your mind, mate. Sometimes it's the safest thing to do. Is this on Hub? We'll have a look at that in a sec. Something else, 34. So just reading through a couple of these comments. Hub. It's still, you can see, I mean, this looks good. For me, that weekly doesn't look bad at all. You got to press up. This action, it's all, you'd say, for a bit lack of a better word, it's engineered to clean out some traders, to put people back on the sideline, to put fuel back on the sideline, because you always need fuel to continue higher. Just remember, every market, every stock, anything, it's got a finite number of buyers or sellers. All right. So if it's been quite a solid uptrend, it's going to get to some point where people don't want to hold anymore. It runs out of steam. People are going to start to turn from buyers to sellers. Anyone that's been holding for a while might start to take some gains off the table, book some profits, all that sort of thing. So these sorts of things, these pullbacks, corrective price action, is always engineered to clean out a few traders. Now, the style of the pullback is always important too, whether it pulls back, whether you get, let me just draw it up. I'll draw it up in a clear. Go away. Whether you get that, so say that's been the uptrend, whether you get this kind of, if that's a deep correction in respect to the move, and you get a good pop up, and then you get another deep correction, that's a serious pullback. That's corrective action. It's more of just up straight back down again, as opposed to the market's being pushed up and then you have a correction and then it starts to hold a lower high, but keeps retesting a zone. That's not a bad thing, okay? But then I always like that. It just means that buyers are piling in at higher levels. As it's cleaning out a few traders, there is some support at higher levels, means there's some confidence in the stock, means that there's still a lot of people potentially on the sidelines to buy into it, as opposed to this, when this is more, when it does run out of steam at a high and you build the serious high low and then bang, it just caves in. That happens a lot on the smaller stocks, your sort of lower cap ones, mid to low cap, I guess. But it is always, again, it's that same principle off the lower highs, but then you just have to see if it breaks through that low, okay, am I going to get out? Have I taken profits? What am I doing here? You just got to take note of what the actual price action is saying. This kind of thing, if it doesn't break through the low and starts to pop up, you can still hold lower highs. As the market's correcting, it can correct sideways or correct down. So there's different styles, pullbacks or corrections. What we can see here, the market's actually, it's holding up, say, through 1050, and it did spike up, took out the most recent lower highs. So that's bullish. I just think what I would like to see from here, especially off the weekly, I'll be sort of sticking more to my weeklies than dailies at the moment, for most stocks anyway, is to consolidate sideways around here or hold around the MAs. Don't mind if it pulls back a bit more, but say hold at 12, 12.50 to 13, sort of that 12 to 13 buck mark. Hold around there, start to find some buying support into that zone, and starting to potentially lift from there, because that's going to be a major high low off your support of around 1050. You've got your major high low. I would prefer always a bit more time up my sleeve for that to build, because don't forget, time sort of confirms price as well, and then just go from there. So yeah, probably a bit too aggressive on that, Lauren. What else we got? SHV, done that. Don't want to talk about that anymore. uh, Sold it. Yeah, well done. Christmas presents. Penny dresser with a huge potential are hard to sell on downtrends with fundamentals are still developing. That's true, Peter. It is. It's really hard, but don't forget, there's still a lot more psychology going in those small ones because everyone, that talk of they can go up hard and they can come down just as hard. No one wants to get caught holding the bag on them, which I have. A2M will do, Gary. Uh, Keep watching A2M. A2 milk. This is this correction, and this is a beautiful. This is probably I would suggest anyone that's trying to learn new to the game or is trying to understand what I'm talking about with price action and corrective price action and buying into a lift. This is probably a really good one to, and anchors especially, is a good one to keep an eye on because it's a good example of price correcting, cleaning out traders, but not actually breaking any significant level. Right? If we just go clearly off the weekly, you've got a zone through here. That's a bit. Actually, we'll leave that there. We've got a zone through here. So for me, this was the weekly anchor. All right, it's pretty much it's corrected sideways. You can see through here. It's even though it's just had a couple of weeks pullback, and that was probably the first real significant move down we had from this full run up. And then it chopped around and we had to build the higher low. So for me, this is corrective price action. That was correction sideways. And then we started to lift. So this big run up here didn't correct whatsoever, had one red candle just after it popped up. And okay, that would have been an ideal entry into new highs. But what we've done is held up above that anchor and corrected quite well. Pull back, potentially that's your next move up, that's your secondary move down. So if we can break it down longer term, we've had a couple of good legs down. We're still holding well above the anchor, probably a 60% retracement all in all. If you look through that $9 zone, that was rejected. It was down to 8, I know that, but it has been rejected there. So for me, if I'm looking at this and I'm more from the weekly again, it's still in corrective mode. If we can get a pop up here, then I'll be looking from the first pullback off a weekly and looking to buy into that potentially off a daily as well. I could have, because it's so broad at the moment between say 9 and 1050, it may still chop around as we get sellers coming in, buyers soaking it up, that point of agreement coming to play out. Then then I'll just be keeping an eye on that weekly chart. But it's a good one to mark up because we haven't broken any anchor. The trend is still up. Longer term, the trend is up. We've had, a lot of people squeezed out of the market. It's probably since the start of the year, since that original spike up, getting squeezed out, but it's holding up and it's starting to build longer term price action, which could be really nice. It could take us straight up and through 14. It could plow up through 14 quite easily. You don't know, but again, I'm looking for that higher low off my weekly chart because it really hasn't confirmed that contraction is still in place off the weekly. If you're trading off the daily and you trade it, and this is why you can see this is actually looking quite good. If you take that breakout, say it's coming out that breakout at 1068, it might be short-lived because we still might turn around and contract that weekly move and come straight back down and stop you out. So it's always good to just keep an eye on that bigger picture as well. I think it's coming to that point where, it's going to make a move. But again, overall market is bearish, then you just want to have that in the back of your mind if you can become a bull. And I don't think we haven't retested any zones on the daily either. I wouldn't mind it seeing it pop up, pull back, retest a zone, and then start to lift again and build a higher low on the daily. And it's probably going to come into play on the weekly as well, a higher low, and then away you go. Yeah. Hub. All right. AZJ. I like the way it's lifted, and it's lifted up to a clear zone around 460. It's pressed up. This is, I can't even say that, AZJ. Horizon Holdings. I swear you guys are picking just ones I can't say rather than easy ones. Good volume. Good volume's come up in the last few days too. You can see that volume's picked up. It is getting into a zone where I don't like to say resistance. I like to say a zone where potentially you're going to find some sellers, especially anyone that's bought it early. So you might just get a reaction off there. It doesn't mean anything. It could go straight through. It could react lower, build a lower high, start to play off with some more selling pressure. it may just touch the zone, retest, pull back, build a high low, then go straight through it. You don't know what's going to happen, but it is coming to an area where if you're going to buy it, you may have to just be concerned about that 460 zone. And on the daily, we're on the daily, it's getting a bit ahead of itself just here. Okay, that was a really shallow pullback, and it took a couple of days, bang, straight back up today and yesterday. So it is getting a bit extended away from that on the daily MAs for me. And the weekly, that trend is still down. It's quite clearly still down. But the beauty is, and this is what, for the bigger picture, we've got, that was a clear resistance zone. We've had some selling up there. Market's pressed down. You've got this sell-off, all right? But this sell-off here is, we'll draw the colors, a lot less steep, or the steepness of that sell-off is more controlled as opposed to this one, bang, straight down. So whatever happened here and caused that is probably getting cleaned out of the market. That fear is getting cleaned out of the market. It hasn't quite held up on the weekly just yet. It hasn't come out. You've got a clear level around that 460. It's starting to lift into 460. So again, all I'd be looking for, and you could probably say, if we can get a pullback to say 410 or 420, the market's pressed up, we can get down to that zone and start to hold up and get some higher lows. And I say inside higher lows, inside to this move up, and this is that move inside. Then you've got an area where you've minimized your risk, and you can work your trade off that that zone, and potentially starting to curve back up again. Does that make sense? Starting to curve back up, and if it does plow up to 460 and go straight through, it's going to happen sometimes, I guess. But even this big sell-off, you got your higher low come into play, higher low here, and it started rallying from there. So if you tend to look for higher lows, it's just confirmation that you're not the only buyer willing to jump in. There's other buyers, so more the weight of numbers behind you to prove you're right, and then it's worth throwing risk at it. But at the moment, that weekly's down. We haven't got the higher low at all. And if you look at that weekly, I wouldn't steer. I'd be steering clear just for now, and I would look at that daily as potentially getting a bit ahead of itself into that 460 zone. So, but definitely one to start keeping an eye on there anyway. The last one probably 30th of November at 425. There you go, nice and aggressive there, Paul. These little shallow pullbacks, but that's working out. It's working out for you, great. So even though Paul is just trading, I'm guessing purely off the daily charts, it is off higher lows, and he's getting confirmation off higher lows. All right, so it's even if this doesn't play out, and I'm right, it backs off from here or 460. He's given himself a chance. He's given himself a chance to work off the higher lows, which is showing some good strength. It's touched on, say, backed off here, started to rise. He's jumped in, but he's working off these higher lows, and that's confidence that buyers are starting to step in. Maybe shorter term buyers are starting to run out of steam, and you get some long term sellers jump in. We don't know, or he's going to be right, and we're going to plow through 460, and away we go. Either way, he's giving himself a good chance to work off proper structure, rather than just buy off off a support zone. And that's really good. There's some good little winners lately off that, so great. Perfect, mate. Look, it's working out great. I like the every time you put up something that's working well, it is off a higher low, and you can see why you bought it. And I can't disagree with buying it off that daily, knowing that potentially you can have some, might struggle up towards 460, starting to get a bit stretched. But either way, you're up, and you're giving yourself a chance to be for a big trade. And that's buying early. That's buying really early, so that's nice. Buying in the unknown. All right, last one. Let's just take a look at CBA, just for some giggles. We can see we don't have a head and shoulders here. I don't know if we will or not. I wouldn't be saying this to buy. I think it's still, we talk about bouncing off the MAs, whether it's up or down. Bouncing off the MAs here, and potentially here. All right, on the weekly anyway. So we could be starting to roll over, and that means we could be starting towards that $66 mark, taking out the lows, continue on the longer term trend down. This is that longer term trend down off the monthly. We've already taken out $70, which we had earmarked for a while there. Didn't play out. It is still struggling. The sellers are struggling to keep pushing it through there. We know what's going on now with all the I don't know, reforms of what's happening with I can't remember what it's called now. The government, the inquiry. A lot of that's played out. They've paid their fines. Whether there's more fines to come, I don't know. But or whether they're going to change, which I doubt it. I don't think they're ever going to cap the banks from making money. If there's going to be some reforms, and I think that's the next big question for the banks and the banking sector and the financials, is reforms. But either way, I wouldn't go near the buying just off my weeklies for now. I'd like to buy. The weeklies are starting to rise, and then go down to the dailies to get your entries, just to refine the entries. But at the moment, again, I just want to steer clear of that. I mean, this could just go up. It might be capped at 73. It might build a lower high here. You got your shoulder, head one, shoulder, left shoulder, head, right shoulder. I don't even look at that generally, but you can see what I'm talking about. It could play out, and if that's going to go through A68, you potentially go from $5 drop, takes you down to through the lows. We'll see how it goes. No, look, it could easily, Helen. I agree with you there. It could easily. For all the old fundamentals coming out, you're dreaming. All right, let's see. The one thing going for you, Paul, is how this is corrected. It's corrected. It hasn't, fell off a cliff. Longer term, anyway, from the highs. It's got a bit of a fall here, bit of a bounce. We held up around 70. Got a bit of a lift. We've come straight back into 70. But this sell-off since probably the start to the mid, these highs around what's that 80, 88, has been a lot more controlled. It's been, you wouldn't want to hold it. I would rather buy it off a major higher low if I'm going to buy into the banks. But yeah, it's been a bit more controlled than this sell-off, the original sell-off here, and that's the original sell-off, bang, straight back down. That steepness of that sell-off was a lot steeper than what we've seen a good part of a year and a half now. Anyway, we will keep an eye on it. Yeah, yeah, and this is what we talk about: fear. Never have it in your mind that it can't get there, because anything can do anything anytime. You never discount it, because the time you discount it is the time you're going to get cleaned up. If you don't discount it, it just means that you're preparing for the worst and you're trading from what you see rather than what you think. Um, we'll see. We'll see. All right, guys, I better call it a day there. Thanks very much for joining us. We'll be back in on Monday. So let's see how we all go, see what happens over what's tonight and tomorrow night. And don't forget, I think we've got next Thursday is the rollover of the SPY contract, the futures contract. So it can get a bit choppy into that. So probably, the next, I wouldn't say this week, so probably Monday, Tuesday, Wednesday, it could get a bit choppy on the market as they reposition the end of the contract. The argy bargy, and don't forget, I think Thursday's a prolonged open. Usually it's 11 minutes. I don't know how long it goes for, maybe half an hour, 20 minutes. The open's a bit longer, a bit delayed. Just be aware that's going to be happening. It's the third Thursday of every contract month. So what's that? Thursday of December, which is Thursday next week. So have a great weekend, guys. Thanks for joining me. We'll be back in at 12:30 Monday. Cheers, guys. Bye.